Look, I'm going to show you something wild right now. Two people walk into a bank. Same job, same income, same everything. One walks out saving $50,000. The other gets absolutely destroyed. The only difference? 100 credit score points. That's it. And by the end of this video, you're going to know exactly how to be the person who saves that money. Let's go. Welcome to Success Talks. We unveil wealth secrets hidden from the world's sight. Step into the domain of financial freedom. Remember, this is for educational purposes only. All right, so here's the deal. Most people think credit scores are just some random number the bank's made up to mess with us, right? Like, oh, it's 720 today, cool, whatever. But man, that number is literally printing money or burning it right in front of your face, and you don't even realize it. I'm talking about real money. 50 grand, 100 grand over your lifetime, maybe more. And the crazy part? It's not even that hard to fix if you know what you're doing. So today, we're breaking down the whole system. I'm going to show you the exact math on how 100 points saves you tens of thousands of dollars. We're going to talk about what actually moves your score, and spoiler alert, some of the stuff you think matters doesn't matter at all. And then I'm giving you the actual playbook, like step-by-step what to do starting today to get those points up. No fluff, no BS, just the real stuff that actually works. Sound good? Let's dive in. Okay, let's start with the numbers because this is where it gets insane. Let's say you're buying a house. Average home price in the US is around $400,000, give or take, depending on where you live. You're putting down 20%, so you're financing $320,000 over 30 years. Pretty standard, right? Now here's where your credit score comes in. If you've got a 620 credit score, which is like not terrible but not great, you're probably looking at an interest rate around 7.5% right now, maybe even higher depending on the lender. But if you've got a 720, you're getting closer to 6.5%, maybe even better. That 1% difference, just 100 points on your credit score, means you're paying about $250 less every single month. Every month. That's $3,000 a year. Over 30 years, we're talking $75,000 in interest you just don't have to pay.
And that's just your mortgage. We haven't even talked about car loans yet. Let's say you finance a $35,000 car for 5 years. Bad credit, you're getting hit with like 10%, maybe 12% interest. Good credit, you're looking at 5%, maybe 6%. That difference right there is another $3,000 to $5,000 over the life of the loan. Add it up, mortgage, car, maybe a personal loan here and there, credit cards. Dude, it's not 50 grand. It's way more than that for most people. Your credit score is literally the difference between building wealth and staying broke, period. All right, so now you're probably like, okay, I get it. Credit scores matter, but what actually makes them go up or down? Good question. Let me break down the 5 things that actually move your score, because a lot of people are out here stressing about the wrong stuff. Number 1, payment history, 35% of your score. This is the big one. Are you paying your bills on time? That's it. Credit card, car payment, student loans, whatever. Just pay on time. Every time you're late, you're taking a sledgehammer to your score. One 30-day late payment can drop you 50 to 100 points, depending on where you're starting from. So yeah, set up auto pay. Seriously. Number 2, credit utilization, 30% of your score. This is how much of your available credit you're actually using. So if you got a credit card with a $10,000 limit and you're carrying a $5,000 balance, you're at 50% utilization. That's bad. You want to be under 30%, ideally under 10% if you really want to see your score jump. Here's the move. Pay your card down before the statement closes, not just before the due date. Most people don't know this. The balance that gets reported to the credit bureaus is whatever's on your statement. So if you pay it down early, boom, lower utilization gets reported. Number 3, length of credit history, 15%. How long have you had credit? The longer, the better. So don't close your old credit cards, even if you're not using them. That old card from college that you never use, keep it open. It's helping you. Number 4, credit mix, 10%. Do you have different types of credit, like a credit card, a car loan, maybe a mortgage? The system likes seeing that you can handle different kinds of debt responsibly. You don't need to go out and get a loan you don't need, but having a mix helps a little. And number 5, new credit, 10%. Every time you apply for credit, it's a hard inquiry, and that dings your score a few points. 1 or 2 inquiries, no big deal. But if you're applying for like 5 credit cards in a month, that looks sketchy, and your score is going to drop. So those are the 5 factors. And honestly, if you just focus on the first 2, paying on time and keeping your utilization low, you're already going to see major improvements. Okay, real quick, let's talk about some myths because there's so much bad info out there and it's driving me crazy. Myth number 1, checking your own credit hurts your score. Nope, not true. When you check your own credit, that's a soft inquiry. It doesn't affect your score at all. You should be checking it regularly, actually. Use Credit Karma, annualcreditreport.com, whatever. Just keep an eye on it. Myth number 2, you need to carry a balance on your credit card to build credit. This one makes me so mad because people are paying interest for no reason. You do not need to carry a balance. Just use your card, pay it off in full every month, and your score will go up just fine. Don't give the credit card companies free money. Myth number 3, closing a card helps your score. Wrong again. Closing a card usually hurts you because it reduces your available credit, which means your utilization goes up. Plus, if it's an old card, you're losing that credit history. Keep it open unless there's a crazy annual fee or something. Myth number 4, all debt is bad. Not true. There's good debt and bad debt. A mortgage, that's usually good debt. It's building equity. High interest credit card debt on stuff you don't need, that's bad debt. Your credit score doesn't care about the difference, but your wallet sure does. All right, myths busted. Moving on. This is the part you've been waiting for. What do you actually do to get those 100 points? Step 1, get your credit reports and check for errors. Seriously, do this today. You can get your reports for free from all 3 bureaus, Equifax, Experian, and TransUnion at annualcreditreport.com. Look through them. You'd be shocked how many people have errors on their reports. Old accounts that should be closed, late payments that weren't actually late, stuff that doesn't even belong to you. If you find an error, dispute it. You can do it online. It takes like 10 minutes. I've seen people jump 30, 40 points just from getting errors removed. Step 2, pay down your credit card balances ASAP. Remember, utilization is 30% of your score. This is the fastest way to see results. If you got the cash, pay those cards down below 30% utilization, ideally below 10%. Don't have the cash? Here's a hack. Ask for a credit limit increase. If they raise your limit and you keep the same balance, your utilization just dropped. Just don't use the extra credit, all right? That defeats the whole purpose. Step 3, set up autopay for everything. Payment history is 35% of your score. You cannot miss payments. I don't care if it's $15, pay it on time. Set up autopay for the minimum at least. Then you can always pay more manually, but that way you're never late. Step 4, become an authorized user. This one's a cheat code. If you've got a family member or close friend with great credit, ask them to add you as an authorized user on one of their cards. You don't even need the physical card. Their good payment history gets added to your credit report, and boom, your score goes up. Just make sure it's someone responsible, because if they mess up, it hurts you too. Step 5, get a secured credit card if you're starting from scratch. If your credit's really bad or you're just starting out, get a secured card. You put down a deposit like $200, $500, whatever, and that becomes your credit limit. Use it for small purchases, pay it off every month, and you're building credit. After 6 months to a year of responsible use, they'll usually upgrade you to a regular card and give you your deposit back. Step 6, don't apply for a bunch of new credit. Chill out with the applications. Every hard inquiry dings your score a little bit. If you need new credit, cool, but space it out. Don't apply for 5 cards in 1 week just because you're trying to build credit. That's going to backfire. Step 7, let time do its thing. Here's the truth nobody wants to hear. Building great credit takes time. You can't go from 580 to 750 overnight, but if you do the stuff I just mentioned, you can see a 50 to 100 point jump in like 6 months to a year, and that's huge. Be patient, stay consistent, it works. Step 8, consider a credit builder loan. Some credit unions and online lenders offer these. Basically, you borrow like $500 or $1,000, but they hold it in an account. You make payments every month, and once it's paid off, you get the money back. But the whole time, those payments are being reported to the credit bureaus, building your history. It's not for everyone, but if you're really trying to build credit fast, it's worth looking into. All right, so you're doing all this stuff, your score is going up. What's next? Here's the thing. Good credit isn't just about getting a loan, it's about options. When you've got a 750 plus credit score, you've got leverage. You can negotiate better rates, you can refinance when rates drop, you can get approved for that business loan to start your side hustle. You can rent a nicer apartment without jumping through a million hoops. Bad credit keeps you stuck. Good credit opens doors. And look, I know it seems unfair. Like, why should 3 companies have this much control over your financial life? I get it, but that's the system we're working with, so you might as well play the game and win. Think of your credit score like your financial GPA. Employers check it, landlords check it, insurance companies use it to set your rates. It's not just about borrowing money anymore. It's about your whole financial life. So take it seriously. Check your score every few months. Keep your utilization low. Pay on time, don't do anything crazy. And here's a pro tip. Once you get your score up, keep it there. Don't slack off. I've seen people work their butts off to get to 750, then they go on a shopping spree and tank it back down to 650. Don't be that person. Treat your credit like an asset, because that's what it is. All right, let's wrap this up. We just covered a ton, so let me hit you with the main points real quick. Number 1. Your credit score can literally save you $50,000 or more over your lifetime. That's not an exaggeration. That's just math. Number 2, payment history and credit utilization are the 2 biggest factors. Pay on time, keep your balances low, and you're already winning. Number 3, check your credit reports for errors. Dispute anything that's wrong. This alone can boost your score. Number 4, use the playbook. Get added as an authorized user. Consider a secured card if you need to. Don't apply for a ton of new credit all at once. And number 5, be patient. This isn't a sprint, it's a marathon. But if you stay consistent, you will see results. Look, I know credit scores can feel overwhelming, especially if yours isn't where you want it to be right now. But here's the good news. It's fixable. It's totally in your control. You just gotta take action. Don't wait. Start today. Check your report tonight. Set up autopay tomorrow. Make a plan to pay down those balances. Little steps add up to big wins. You got this. All right, before you go, do me a favor. If you found this video helpful, smash that like button. It helps more people find this stuff, and honestly, everybody needs to know this. And hey, if you're not subscribed yet, what are you doing? Hit that subscribe button and turn on notifications, because we're dropping videos every week on building wealth, financial freedom, all that good stuff. I promise you, the next video is going to be just as valuable. Drop a comment below and let me know, what's your credit score goal? Where are you now? Where do you want to be? Let's keep the conversation going. And if you've got a friend or family member who needs to hear this, send them this video. Share the knowledge. We all win when we're all winning. All right, that's it for today. Thanks for watching Success Talks. Now get out there, fix that credit, and go secure the bag. I'll see you in the next one. Peace.